Welcome to our mini-series on carbon dioxide removal.
In our previous video, we explored what carbon dioxide removal is and how it's financed.
Today, we focus on the CDR market, exploring how it works and identifying its key players.
The carbon market allows trading between parties willing to compensate for their excess emissions or monetize their low or negative emissions.
Within these systems, we find compliance market, where the EU emission scheme is the largest. Here's a quick overview of how it works. Within high-emitting industries such as manufacturing or energy, Company A emits a certain amount and Company B emits substantially more. Since they are regulated, the emissions cap sets the upper limit for how much they are allowed to emit. The amount of CO2 below the line then becomes tradable.
But how does this all relate to CDR, since it's not part of the compliance market? The idea behind CDR is that it is emissions negative rather than high emitting.
Correct. By default, CDR does not fall under the current setup of the compliance market. Luckily, there is the voluntary market where forward-looking purchasers can buy offsets irrespective of their regulatory requirements. Let's take a look at who these purchasers are.
The CDR market involves a diverse array of buyers and sellers, each playing a vital role in its operations.
Corporations like Microsoft and Stripe are major buyers, going way beyond their regulatory requirements in purchasing offsets from promising CDR ventures.
Previously, we mentioned diverse CDR methods, and today, to illustrate, we will use the example of a startup called Running Tide.
Running Tide is an ocean-based solution which uses the sequestering power of kelp. Kelp are these large underwater forests which have immense power to absorb carbon.
That's right, but also to release it once it starts to decay.
This is why Running Tide developed a technology that sinks the kelp to the bottom of the ocean rather than letting it flow on the surface and release CO2. And of course, it uses advanced technology to track it once it's sunk, because the ocean is never still, hence the name Running Tide.
Stripe is one of Running Tide's early purchasers. Back in 2021, it entered into its first deal, committing initially to pay $150,000 to remove and store 600 tons of CO2. That's $250 per ton, which is substantially higher than the price of a ton bought for planting trees.
Indeed, but Stripe doesn't just look at this as an expense, but rather an investment. In fact, in the same deal, it commits to paying $350,000, a sort of R&D grant for advancing Running Tide technology and making it more effective.
But the agreement doesn't stop there. To really incentivize the venture in successfully delivering high-quality removal, Stripe commits to purchasing $1 million worth of removal.
And this is just from Running Tide, while the company has a pretty extensive portfolio of ventures which is backing. It also mobilized an immense amount of capital by initiating a climate fund called Frontier, with other tech companies such as Shopify, Meta, and Google. By making such commitments and pooling funds, the company attracted quite a lot of attention, but also curiosity, as everyone is trying to understand why big tech is pouring money into the CDR industry, or more specifically, what the business case is.
If you would like for us to untangle this phenomenon, leave a comment in the thread, and we will designate a future episode to that intriguing question. However, in today's episode, we want to take a look into another important group of actors in this market, and these are the marketplaces.
Marketplaces play a crucial role in facilitating transactions and ensuring market's integrity. They can act as brokers, retailers, but also as project developers. Considering the early stages of the market, which affects buyers' trust, they also serve as quality assurance, often making the existing methodologies more stringent.
The list of marketplaces is extensive and keeps increasing with the market's boom. To build on our existing example, Running Tide, marketplaces also played an important role as early investors. For instance, Denmark-based marketplace Climate.co and US-based Watershed also made substantial pre-purchases for Running Tide's offset before selling them to corporate buyers.
The carbon market is a vital mechanism for financing carbon removal, involving a diverse array of buyers and sellers.
By participating in these markets, corporations and governments can significantly contribute to global climate goals.
Thank you for watching. Stay informed and support efforts to combat climate change. If you want to stay up to date with new purchases, definitely check out the CDR.FYI, a great website that tracks all transactions in the CDR space.